Well, good morning, all. And let me introduce, I'm Shashank. I welcome you all, ladies and gentlemen, over here to our highly anticipated webinar on ESOP communication and education. And today we gather to delve into a topic of immense significance in realm of employee empowerment and organizational growth. And in this webinar, we will explore the strategies and best practices that drive effective communication and education about ESOPs. And we firmly believe that engaging employees in understanding the value and benefit of ESOP is vital for fostering a sense of ownership and commitment and alignment with your company goals. And to shed light on this topic, we have honored to, we are honored to have, with us today, distinguished speaker, Mr. Vikram. With his extensive experience and deep expertise in ESOPs, Vikram will, has helped numerous organizations to unlock the full potential of their ESOP programs, driving employee engagement and overall success. So just to introduce, talk a little bit about Vikram. So Vikram is, having more than 15 years of experience, primarily into investment banking. Prior to, joining with Capita, he has worked with renowned names like, Spark Capital, Citigroup, Global Markets, and advised, advised on funding and M&A transaction worth more than $800 million. And prior to his role as a CFO at India's leading rural e-commerce startup, right? And he's very much passionate about working with solving the problem of founders and startups. He is a CA rank holder also, as well as IM alumni, where he has pursued his MBA as well, right? And I really welcome Vikram to please take us to the journey of employee communication, how and what are the strategies, how it is significant in any corporate to have ESOP communication in place and how it plays a vital role in it. Over to you, Vikram, and welcome to the webinar.
Thanks a lot, Shashank, for those kind words. Pleasure to be speaking in front of all of you today. The way we can probably run this event, I have a short presentation, should wrap it up maybe in half an hour. I'll take 10 minutes to maybe just quickly show you our platform and how our platform can actually help in driving communication and motivation amongst employees. And then we can leave it open for Q&A, maybe for 10 minutes or so. But we are a fairly, sort of close group in that sense. So please feel free to drop any questions you have in chat. I will take up those questions as soon as I finish the presentation. In any case, we will throw it open for a general Q&A for the last 10 minutes. So that's probably the way we can sort of run this. So let me share my screen. So just adding on to what Shashank has sort of talked about my past experience specific to ESOPs. So I was involved in a few ESOP implementation processes for some of the companies where we were raising funding. And I could really see the challenges which companies go through, both in terms of getting ESOP schemes set up, as well as in terms of really motivating their employees and helping their employees understand as to how how ESOPs work in general itself. I had an opportunity to be part of that process itself when I was heading finance for a rural e-commerce startup, and I could really see the gap in let's say thinking where the founders stood in terms of the way they thought about their own equity, their own ESOPs, and the way they felt, yes, we are sharing ownership with employees, to the way employees actually perceived ESOPs. So really felt a very significant pain point and a problem to be solved in that domain. That was one of the reasons why I joined Capita as well. So it's been 3 years for me, and hope all of you will see value out of this session and maybe some of the learnings which I've had and we've had as a group over the last few years. So as I, before I get into the specifics of the communication element of it, maybe we can quickly revisit what is the whole construct of ESOPs itself and why should employees even be excited about something like ESOPs. So just in terms of first principles, this is a long-term incentive linked to the equity value of the company. It's intended for employees to motivate and to retain employees. It's an option, not an obligation, to purchase the shares of a company at a certain price, which is called the strike price or the exercise price. The option is not given to employees immediately. As I talked about, it's a long-term incentive. So the option vests over a period of time. So employees typically get it over a 4-year, 3-year, or a 5-year period. So what is the value of an ESOP at any given point of time? It's going to be the value of the share, the fair market value of the shares of the company, less what I need to pay to acquire the share of the company, which is the strike price. Why are we excited about ESOPs? Just throwing a few facts at you and a few anecdotes here. The potential market value of the top 100 unlisted, sort of startups, just the 100 unicorns in India, is around $300 billion. And even if I assume 5% of these companies are held by employees and in the form of ESOPs, that represents a $15 billion opportunity. And a $15 billion worth of wealth creation, which is in the hands of employees, not because they contributed capital or sort of had to sort of find the reserves to actually contribute capital, purely on account of their hard work and the performance which they delivered in each of these companies. So we feel ESOPs are a very critical tool to build companies, to build sort of startups, build listed companies as well, and also for employees as an opportunity to participate in the wealth creation of an enterprise as the enterprise scales, in addition to the founder and the investors of the company. Why should anyone sort of consider ESOPs? Why should employees really look to ESOP compensation and actually ask for ESOPs in companies? ESOPs as a tool aligns incentives with value creation. So the employees who are really driving value in your company get a portion of that value flowing back to them. You are incentivizing them to drive additional value for the shareholders and for the founders and investors. It creates an ownership mindset in the employees. So as an equity holder in the company in the form of ESOPs, I stop thinking of myself as an employee. I start taking the right decisions as if I'm the entrepreneur and with a long-term view in mind, because I know that long-term performance and value creation is required for me to create value for myself. So it really drives entrepreneurial behavior. It's a very critical tool for employees to create upside for themselves. And when I say upside, it's non-linear, disproportionate upside. As compared to an employee who probably goes to a company and says, I don't want ESOPs, just pay me my fixed salary plus whatever increment, and even if I say variable and things like that. If I plot that employee's sort of cash earnings over maybe a 5-year or a 10-year period, it is in no way going to be comparable to an employee who actually has equity in the company, because the potential for equity to deliver a very high non-linear upside is actually far more than what one can actually expect from a pure cash compensation situation. And that's because employees also assuming a certain risk along with the founders and the investors in the company, and the risk is associated with that proportionately higher reward. And in this case, employees are in at least partial control of the direction of the company and in sort of delivering these earnings for themselves. So over a long enough period, one can definitely expect equity to deliver far more returns to an employee as compared to any form of cash incentive. So that's the reason why we feel employees should take ESOP seriously, companies should take ESOP seriously. But practice on the ground has often been different. And we have seen cases where employees don't understand how ESOPs work. They don't understand the wealth creation potential in ESOPs. The company also struggles to communicate this to them. And this results in situation as we saw in a live case with one of a potential customer, where employees are sort of moving out of the organization for cash pay hikes without any discussion on the ESOPs which they're leaving behind in the company. And that is when the organization really took note to say, we are not doing enough to communicate why employees should be excited about ESOPs, and that's the reason why they're not taking it seriously. And this is reflected even if you are joining this call, and if you are from the HR sort of department, you might have seen this in your negotiation discussions. In a lot of cases, employees, maybe at a junior level also, may not really understand, may not negotiate on ESOPs. They will all be focused on getting whatever hike they sort of want to get on their cash component. Some employees may negotiate for ESOPs, but they may not negotiate with a certain objective in mind. It may just be something to say, okay, this is an add-on for me. So how much can you give me in the form of ESOPs? And that is where we feel communication is critical. to really achieve the objectives as to why you've gone through the process of setting up an ESOP scheme in the first place. So my objective, the company's objective in terms of launching an ESOP scheme is employee motivation retention. Now that objective will not be met unless there is consistent and continuous communication and engagement with employees across the life cycle. Why else is employee communication critical? The idea behind an equity incentive scheme is to really drive and push the employees towards achievement of the organizational goals, the common organizational goals. So if I'm part of a startup and I'm a founder at a startup and I want to get my company to, let's say, $100 million valuation, raise my Series B round of funding, then as an organization, we need to achieve multiple things. I need to get to sales of, let's say, $10 million. I need to have a product which is delivered. I need to expand into other markets. So you are really able to link all these objectives to the valuation of the company and thereby to the employee's personal net worth in the form of ESOPs. And basically tell the employees that, yes, we have to get to ABC objectives for all of you guys to see value on your ESOPs and to sort of see that disproportionate value creation for yourself. So communication is critical to have that push towards the organizational goals. And it's also, the true value of ESOPs is unlocked when employees perceive value in what they hold in the form of ESOPs. Now, as an employee who's holding ESOPs, when will I really perceive value? And what do I need to see to really perceive the value? One, I need to see a path towards wealth creation. So I have ESOPs, which is worth something today, which is worth, let's say, X today. Now, if I'm in an early stage company, then I want to see this X grow to 5X in the next 3 years or so. So I need a path and I need a communication from the company to basically lay down this path to say, if you do your job properly, if all of us achieve what we're supposed to achieve, then yes, we will get to a certain valuation benchmark and you will get to your personal net worth benchmark, if I were to call it that, in terms of what you want to achieve from this company. So is it possible for me as an employee? Am I able to see sufficient value creation for myself in the ESOPs I hold? And how can the company actually communicate this to me as an employee? So that is one critical element of communication which is required. The other element is not just value creation, and this is, I would say, more suitable for an unlisted company or a startup. The other element of communication is the extent to which I can monetize this wealth creation and the value creation. So it's not a great, sort of message for an employee to say, yes, we will grow substantially as an organization, but you will see money on the ESOPs only when we go for an IPO. And that may take like 10 years or 12 years. That's just too long a time frame for employees to really feel motivated about ESOPs. So then the conversation on liquidity starts. Like, when can you sort of, provide liquidity? Can you really promise liquidity? It's very difficult to do that. No one does this practically, or very few people actually do it from a practical perspective. But is there at least a story on liquidity for employees to perceive, to say that, yes, if things go well, we will actually be able to monetize at least part of what we have created as wealth for ourselves in the form of ESOPs. Communication is also important for employees to take the right financial decisions with respect to taxation. So as an employee, if let's say as a company, if you're approaching a liquidity event or an IPO, then the communication and the clarity for an employee to say, yes, you know what, now that there's a liquidity event on the horizon, maybe I may want to exercise my ESOPs, pay the tax today, and hold my ESOPs so that I get the benefit of better tax treatment in the future. So can I take the right financial decisions? And I need inputs from the company to take the right financial decisions and maximize my payout from the ESOPs itself. So the net result of all of this and of the communication, and what I feel should be an objective for companies, is employees should really view their ESOPs as a wealth asset and as a financial asset. Today, what we feel is that, especially in unlisted companies, that element of thinking is not there. ESOPs are just like a windfall. It's just out there for me. Maybe I'll make some money out of it, maybe I won't. But an employee is not perceiving his or her ESOPs the way they perceive what they've invested into shares or into mutual funds or into, let's say, debt instruments, right? Why is that not happening? Why are ESOPs not being considered a financial asset? Part of it is because of the risk associated. But yes, there are risky investments I make even in the stock market or even outside of that in the futures and options market. Why am I not viewing ESOPs, right? And that's where the communication comes in. Employees should really view this as an asset for the company to achieve its objectives and for the objectives of the ESOP scheme to be realized. So I talked about continuous communication now I can give some context in terms of saying what is really required to be communicated across the life cycle of your ESOPs, right? And again, the life cycle of ESOPs also in some level, you can mirror it with the life cycle of the company itself. So as an employee, what would I want to hear and what do I expect to hear? And as a company, what is critical for you to really, sort of inform the employees and keep them informed at various stages, right? So starting from the scheme stage itself. So you've taken the decision to launch ESOPs in your company. You've already drafted an ESOP scheme. You have started granting ESOPs itself. The ESOP scheme is going to be like a 15 to 20 page legal document. So most employees, even people with, let's say, a financial background, may struggle to understand what the scheme really says. So it becomes important for companies to provide clarity on this in terms of saying, okay, this is what the scheme means. These are the guidelines which govern the way ESOPs are going to be, sort of handled in our company, and this is what it means for you, right? This includes things like what are my separation, sort of policies. Are there any restrictions on my exercise or transfer? And even outside of the scheme, from a ESOP program perspective, if I am a new joinee in an organization, I would want to know what is the coverage going to be? How does this company think about ESOPs? Am I running a company where I want 100% coverage? So as an employee, I am still eligible for ESOPs. Is that the way it works for me? Or is it, do I become eligible after a certain point of time? Maybe when I get to middle management or maybe when I get to senior management, or is it only for the top CXOs of the company? So as employees, that clarity, that visibility needs to be there. And again, this may not be something which you will, sort of put out in an ESOP scheme. You may not want to restrict yourself that way, but at least to have it as part of your HR manual to say who are really eligible for ESOPs in the company and what is the stated intent to cover. Like we will cover everyone from middle management and above, or we will give ESOPs to everyone provided you complete 1 year in the company. These could be certain means by which you set some rules as to who's getting covered in the company. And it's important to communicate those rules to employees as well. The sort of consequence of not doing this properly is lack of clarity. So employees join the company, they see that some of their peers have ESOPs, they may not have ESOPs, they don't understand as to I'm really eligible, not eligible, raises questions for the HR team, and which HR team has to answer on an ad hoc basis. So to the extent you're able to formulate some guidelines around this, have it in your handbook, that helps employees as well. The other element, once you get to the grant stage, yes, now you communicate to the employee in the form of a grant letter. You will typically have what ESOPs I'm getting, what is the quantum of ESOP, my exercise plan, my vesting schedule. These are basic things which you communicate in any grant letter. But maybe some element of guidance in terms of how does a company think about frequency of grants. That may also be a very critical thing which you can communicate, to the organization at large. ESOPs used to be a very ad hoc one-time event. So it always used to be like, yes, I institute an ESOP scheme, I make a bunch of ESOP grants, and then nothing happens for the next 2, 3, 4 years or so. And yes, the employees continue with their vesting schedule and things like that. Now that thinking is changing. Now it's getting to a point where especially the new age companies and the technology companies are thinking of ESOPs as a critical element of the yearly compensation. So in addition to my performance appraisal, which determines my increment and variable, I'm going to get, I may be eligible for ESOPs as well on a yearly basis, and I will be given more and more grants as sort of time goes by. And yes, the quantum based on my level and what promotions and what additional responsibilities I'm taking. So if this can be communicated, if this can be codified in a way, and this can be given to employees to say, yes, you joined our company, you were given a grant of ESOPs. Now it is our intent to provide ESOPs or to make additional ESOPs grant every year. And this is how your equity, sort of curve will look like. If you stay back in our company for the next 5 years, this is how much grants you will potentially make, and this is how much value we can potentially make for yourself. Something like that will be of a lot of value for an employee also to take ESOP seriously and to really think from a future perspective as to how much can I really get with this benefit, with the ESOP benefit the company is providing. Then coming to the point where after the grant is done, now I'm going through the whole vesting process. Notifications on vesting, again, these are sort of something which with a system it's fairly easy to do, but it's critical for an employee also to feel the sense of achievement to say, yes, I've had like a quarterly vesting in this company, the quarters rolled by and I have vested an additional 50 ESOPs. So now, at least in my mind, I'm richer by 50,000 rupees because of my last vesting charge. That is a very important, sort of element of motivation as well. It's a very, sort of optical and more of a psychological element, but it's also a very critical thing for an employee to understand where he or she stands from a vesting perspective. And in case you have performance-based vesting and performance conditions, the more clarity you can provide with respect to where the employee stands from a performance perspective, the better it is in terms of actually motivating the employee to get there. So if I have a tranche of vesting for my ESOPs where I have to achieve $1 million of sales. So if there is some form of continuous communication to tell me that, yes, now you have achieved 75% of your target. You have 3 months to go. Please work hard, get to your target, then you will actually get additional ESOPs vested for you. To the extent you are actually able to communicate that, that actually makes it more likely that the employee will hit their achievement. So you benefit as a company, and the employee actually gets their vesting. So it's a win-win for all. But that element of continuous communication is required. Otherwise, what happens if it is not communicated properly? Employees will go through the whole year, then they will see once the vesting happens that, you know what, I missed out on vesting because I did not achieve my sales target because I didn't really think about it, and nobody really reminded me that I should be working towards my sales achievement, right? So again, it's all communicated in the grant letter, but employees don't review this on a very periodic basis. So if there is some manner in which companies can also have more frequent communication with respect to this, then that's the employee sort of progresses. Maybe there is a separation, sort of event happening. So the employee may be moving out of the organization. So every employee reads the separation clause when they're actually thinking about separating. And they would want to understand what's going to happen to my ESOPs, what happens to my investor ESOPs, what happens to my vested ESOPs. And in case there is a certain exercise period, communication of that exercise period at the time of separation, as well as continuous reminders to assist the employee to actually take the right decision. So if I have like a 2-year exercise window post separation, and I'm approaching the end of those 2 years, then somewhere I think the onus is on the organization to remind the employee to say, you know what, you're not acted on your ESOPs. Now you only have 6 months to act. If you don't act, you're lapsing your ESOPs. You may potentially be losing X amount of rupees. So take a decision on what you want to do. At least to give the choice to the employees, even though they're ex-employees, is only something which is fair from an employee and from an HR perspective. So that element of communication also is something which is expected from organizations. And coming to the point where the exercise sort of happens. So you may have like a restricted exercise where you allow it only upon a liquidity event, or you may have free exercise in your company as well. So a lot of communication with respect to the processes and the tax component and the taxation is required here from an exercise perspective. So when am I opening an exercise window? When can employees exercise actually? Is it like free exercise? Can I come at any point of time? Or do you open specific windows, let's say 4 times a year, or once every month or something, or once a year, where employees can put in requests for exercise? That is something which I want to know as an employee. I am going through the process of exercise. Now I have to pay perquisite tax because I'm exercising my ESOPs, right? What is the tax going to be, right? It's a financial decision for me. And if I'm working in an unlisted company, I need to front this tax and actually pay it to the company upfront. So if that is the case, then I need to know what is, what do I need to really have as a cash outflow here. So that communication is critical. And the process itself. So especially in unlisted companies which have a bunch of investors, they will ask the employees to sign up to a set of transfer restrictions, sign something maybe called a deed of adherence, and sign up to some of the conditions which they have in their shareholder agreement, which is specific to equity holders. So that process is required. So as an employer, I may need to review this form. I may need to take a decision, and I may need to execute this form before my exercise is actually approved. So what is the exercise process going to be? How is it going to happen? Again, just like a handbook or SOP for employees to go through this process so that there is no miscommunication and they don't miss out on an action which they want to take. If they want to exercise, then they should be given every opportunity to go ahead and exercise, right? And coming to the point where the actual, sort of monetization happens in the form of a liquidity event. Now, I talked about how critical liquidity is from a communication perspective as well. At least without, guaranteeing liquidity, at least giving a sense as to when employees can broadly expect liquidity and what they need to achieve to get to that point. So from an organization perspective, it's important to keep employees appraised of the plans surrounding liquidity. So if I am an unlisted company, I'm raising a large round of funding, I feel I may be able to negotiate some sort of liquidity for employees as part of that round of funding, then at least some element of soft communication without making a commitment to say this is something which may happen, right? So you guys gear up for it. Or in case you have any plans, then you can rely on your ESOPs for your liquidity needs. Or if I'm going for an IPO, Preparation process typically starts a year in advance, so that's sufficient time for you to inform an employee that, yes, there is an exit event which is going to happen in the form of an IPO. So you guys can go ahead, you can exercise your shares now. Maybe you get better tax treatment, once an IPO happens. So again, like I said, to take the right financial decision. So what are the plans for liquidity? Now it's a very fine balance to sort of walk here, because one does not want to leave the wrong impression, and one, from a founder's perspective, from a company's perspective, you may not want to guarantee liquidity. Like I said, today, the number of companies in India, again, large unicorns, which are actually guaranteeing liquidity is just a handful, maybe just 2 or 3 companies which are doing it. So there are risks associated with the market, with cash flow being available, funding being available. So people don't want to take this as an obligation. But at the same time, some softer, sort of guidance to say when can you expect liquidity to happen will really help. Then, as I'm, let's say, structuring a liquidity event, as I'm, sort of communicating that to employees formally, what is eligibility? Who can participate, right? So, if it's an IPO, it's very simple. Like the shares become freely tradable, everyone can sort of go ahead sell in the market. But if I'm conducting liquidity with an investor, then I may have a budget constraint. I may want to say employees who have been with me only for 3 years plus can sell up to, let's say, 25% of their vested ESOPs. So these are all parameters for me. It's important to communicate these parameters to employees so that they know if this is what I can expect to get. And a notification to the employees to actually say, yes, this is a window for participating in a liquidity event. And should you sort of choose to extend this to your ex-employees as well, because they are also sitting on, potentially maybe sitting on vested ESOPs or shares. They may also want an opportunity to monetize it. So in the interest of fairness, to keep them informed as well. Tax calculation in a similar fashion. If I'm excising and selling, I'll need to pay perquisite tax, or if I'm selling my already vested ESOPs where I have whole share, maybe I'll need to pay capital gains tax as well. And liquidity as such is a process which takes a lot of structuring and which requires employees to really do a bunch of things. Submit like a demat account details, or open a demat account, submit bank account details, execute a bunch of documents to, sort of give clearance to the company. And make the payment if required of the perquisite tax, etc. as well. So similar to excise, but maybe with more documentation as well. So to keep employees informed about the process, just that they are able to participate and avail of the liquidity. So what I've tried to do in this slide, basically give you a sense as to what are the key elements of communication at various stages of the company and various stages of the ESOP lifecycle itself. But yes, having automated platforms really make all of this a lot easier, make it a lot more, sort of seamless from a communication perspective. So I'll spend maybe 5 minutes just on a few best practices which we have seen, given what we have sort of seen in the market, specifically when it comes to employee communication and employee engagement. So most companies, when they are launching an ESOP scheme, prefer to do an employee town hall. So basically, you make an event out of this. You call all the ESOP holders, the potential ESOP holders together. I've conducted these town halls myself. So you touch upon what the scheme says, what it means for employees, how the share price performance of the company has been, what valuations it has sort of raised funding in the past, where can it go to in the future, give some little bit of a guidance on that. Basically, get a buy-in from employees and consensus that yes, ESOPs is something they should take seriously and they should be motivated by it. And this is like really helps drive that engagement. It gives opportunities for employees also to ask questions in these events, and get some of their doubts clarified. And just gives visibility to your ESOP scheme itself among the broader set of employees. I talked about automation and usage of platforms. So having an employee portal really helps you do a lot of what I described on the prior slide in a continuous and in a real-time fashion. So automating some of your communication systems can help in this process itself. Having some sort of FAQs or simple to understand concepts which demystify ESOPs, because unfortunately ESOP is a domain where there's a lot of jargon. We use the word exercise, grant, vesting, excise period, grant period, and things like that. So what do all of these mean, especially to a non-financial sort of person? So having an ESOP FAQ, which is simple, easy to understand, but which gives all the employees the right information to take the right decisions. I think that is something which will really help. And they're not just an FAQ, online resources as well. So especially employees, senior employees who really have a very large component of ESOPs in their compensation, and even not just senior employees. Today, you even see mid-level employees also getting excited about ESOPs and wanting to understand more than what the immediate companies, sort of resources sort of allow. So having some sort of online resources or having tie-ups with, let's say, someone like us, where we can provide these resources, helps in driving that engagement. So as an employee, I may want to read up a little bit more about ESOPs. I want to really understand how exercise works. I may be far away from an exercise or a liquidity event, but it just gives me a sense of achievement to understand where it can actually get to. And most critically, communication of the potential wealth creation. So I talked about it, earlier in terms of how you can link your performance metrics to what the valuation of the company is, but to also help employees translate the company's valuation to their own personal network. So some sort of a sense for employees to say, yes, if my company gets to a Series B round and gets to $100 million in terms of value, that means my ESOPs are worth $200,000, right? Now, what will it take for my company to get to $100 million in value, get to Series B? It means that potentially I may need to achieve sales of $10 million, or we all need to achieve sales of $10 million. What is my role in this entire process, right? So we are also doing a lot of work in terms of trying to really tightly integrate performance measurement systems with our ESOP portal and our ESOP systems as well. So the link is so much more clearly established to say, I have to hit my sales numbers for this year, because if I don't do it, I am really sort of penalizing myself in terms of what I may lose in terms of my ESOP wealth creation itself. So again, this is more of a work in progress, more in terms of thinking as we speak to other companies as well. But this is key on the minds of a lot of HR, sort of talent professionals, and especially when it comes to performance measurement, to really say yes, give the employee a sense of where he or she is performing and what it means in terms of their personal network. And finally, like I talked about, a guidance or at least some sort of a plan when it comes to liquidity and monetization options. So what we evangelize at Capita is really structured liquidity. After a certain stage, if employees, if companies are able to give some timeline to say every year we will conduct some sort of a monetization event. This is how the participation and eligibility will be. And that enables employees to, one, have the comfort that yes, I will have opportunities to sort of monetize what I hold in the form of ESOPs, and not just that, take the right decisions. So we have seen instances in companies where there are multiple, like liquidity has been done multiple times, and there is some element of periodicity here. Maybe the first liquidity event, there may be a bit of a rush to sell, to say let's monetize as much as possible. But from the time employees start realizing that yes, I will be given multiple options to sort of monetize in the future as well, they start taking financial decisions and they start saying, you know what, why should I sell at this price? The company is only worth $100 million. I think this company is really going to get to $500 million in terms of value. So why should I sell now? I don't need liquidity now. Let me wait for 2 years. I'm sure there'll be liquidity event. Let me monetize and let me make more wealth for myself. So these are the sort of decisions you want your employees to take, to really view their holdings as an asset and to sort of have that long-term vision to say, yes, let me not ask for money now, let me ask for money after 2 years sort of a thing. And that achieves your objectives of retention as well. So that's just a few, sort of best practices and sort of things which you have noticed in the market, which I felt I should share. I'll maybe take a pause here and I'll maybe quickly check chat to see if there are a bunch of questions. I can take those questions now before I cover the overview of our platform. What shall be the exercise price? How to determine the same? Is there any limit of minimum or maximum exercise price? That's a good question from Nishi. Yes, there is if you're talking about an Indian company and an India domiciled company, the minimum exercise price is the face value of the share, which is going to be like 10 rupees or something more than that. So it's a statutory minimum, but it may not be a very significant number, because in most cases your share value may be like 5,000, 10,000, like 50,000 rupees also. But the employee needs to set an exercise price and pay at least 10 rupees to acquire that share. So there is no minimum. There is no maximum as well. So there is no regulatory requirement that there has to be a maximum exercise price. But what is common market practice? So if you're a listed company, then more often than not, you will price your ESOPs close to the fair market value of the share where the share is trading at. If you're an unlisted company, again, very common practice to either keep it fairly low, keep it at 10 rupees, the lowest quantum possible, so that employee gets maximum benefit, or you keep it at a discount to the F&D. Because the reason why people do it is that as an employee working in an unlisted company, I would like to see some value of my ESOPs even today as a grant is being made to me. And yes, I expect the value to go up in the future, but I want to see a certain value. Hope that answers. So the next question from Nishi is there any time limit to keep unvested lapsed options in the ESOP pool? There is no time limit. The way the scheme will be designed and drafted is to say the scheme is going to be live until all the ESOPs are granted and exercised. That is when the scheme actually comes to a close. So as long as your scheme is live and you have unvested ESOPs in the pool, there is no time limit to it. So there is no expiry for the ESOPs which you have in your ESOP pool. Question from Sukhvinder: how does exercise work in an unlisted company? So again, the challenge with an unlisted company is if employees exercise, they will need to pay tax. Now, if I'm in a listed company, I can sell the share, I can realize the cash, pay the tax. I don't have that option very readily available for me in an unlisted company. So I'm talking about a private company. I need a board approval. There is no ready market for these shares. Even if the board approves, who's really going to buy 0.1% stake from me as an employee? That's a question. And if I have investors, even if there is a market, my investors may restrict me from selling my shares. They may have transfer restrictions as well. So practically speaking, what we see in a lot of unlisted companies, they link the exercise to a liquidity event. So basically, they tell an employee, please don't go down the path of exercise. You end up paying tax, and then you'll be out of pocket from a tax perspective. Rather wait for a liquidity event to happen. So when we are providing some sort of liquidity, either a buyback or an investor coming in taking over shares, that is when we will actually allow you to exercise and sell, so that you have visibility that you'll make the money of the shares. Therefore, you can exercise and you'll be able to pay your tax. So that's, like, I would say, what we see a lot of unlisted companies doing. But again, it's a question of life cycle. A very early stage company, more often than not, will have a restriction on exercise linked to a liquidity event. Whereas a later stage company, especially a company approaching IPO, may want to allow their employees to optimize for tax. So then if I feel an IPO may happen in 2 years, I may take a call and say, you know what, why don't I allow my employees to exercise? Let them take the call if they want to pay tax. But if they hold the share for more than 2 years, or when the company gets listed, then they get the benefit of long-term capital gains. So let's give them the option of saving on tax as well, provided that they take a risk in terms of paying the tax to them. So that's a call which typically later stage companies take. But if you're an early stage company, even I would recommend, it doesn't make sense to have free exercise. It always makes sense to restrict exercise. Question from Shweta. Employee needs to inform ex-employee liquidation event or any exit event. What if the employee does not have any event plan? When and how can ex-employees exercise his or her ESOPs in such case? Good question. Like I said, there is no practice today in the market. Like I said, barring 1 or 2 companies, no one guarantees liquidity. Markets are fairly unpredictable. My funding situation is unpredictable. I cannot guarantee liquidity at a certain point and then discover that I don't have money at that point of time to service the liquidity request. So it's a risk which employees need to take. So companies may give a guidance to say, you know what, when we are doing a Series C, we will provide or we will explore some liquidity options for employees. That may be something which they say, but they don't commit to it. So if that is the case, then what options do I have as an ex-employee of the company? So one, the company may choose to conduct a liquidity event, can cover me under the liquidity event, all of which is decided by the board or the compensation committee of the company. That is the case, then as an ex-employee, I can come back and I can participate, right? If I don't have that option, then I need to look at my ESOP scheme and understand my exercise period. So some companies, in the interest of just keeping things very employee friendly, they may give a very long exercise period for ex-employees. They may say you can hold your vested ESOPs even if you leave my company for 10 years, right? Or you can hold it as long as my continuing employees. But some companies may set a certain restriction. They may say you can only hold ESOPs after you leave my company for 2 years or 3 years or 5 years. If you're approaching the end of that exercise period, then as an ex-employee, you have a choice to make. You will have to either go tell the company that you're going to exercise, in which case the company has to process that exercise and you will need to pay tax, or you will have to lapse the ESOPs. So that's the only option available to you. So in quite a few unlisted companies, employees don't want to take this sort of option, right? Because I don't know when liquidity is going to come to me, but I have to pay tax today. That's a real liability in front of my eyes if I exercise today. So many companies actually set their exercise period very, very low. And, in a very convoluted fashion, they are influencing their employees to lapse their ESOPs and not really exercise it. But off late, that practice also is being a little bit frowned upon. So like especially startups are actually being a little bit more generous with giving a longer exercise period. But yes, whatever the exercise period is, as defined by your scheme, If I do not act within that exercise period, and if the company does not provide me liquidity within that exercise period, then my options lapse. I don't have a option. I don't have anything else to really sort of. I don't have any other way to sort of mitigate. What are the best practices in terms of helping employees in tax saving during exercise of ESOPs? Again, very difficult to sort of have tax saving options as such in a country like us. But yeah, the one thing which you can do is to link. I mean, it's not tax saving as such. You're just trying to mitigate cash flow impact for your employees. So by restricting exercise, allowing exercise to happen when a liquidity event is happening, you may not be saving tax, you'll end up paying higher tax, but at least you ensure employees not going out of pocket. But specific to tax saving, yes, maybe allowing exercise is an option to give employees to save tax, right? Because if employees take the decision to exercise, hold their shares for a period of time, for a period of 2 years, then they get the benefit of long-term capital gains. So there is a risk-reward trade-off. I need to part with tax today in the hope that I get a liquidity event in the future at a higher value so that I save tax on that. But that's literally the only thing which a company can help in terms of the tax saving itself. Other than that, if it's been some time since you've raised funding, you can try to be a bit conservative with respect to the merchant banker valuation which you obtain. So you will need to justify to the tax department with respect to how much tax you've deducted based on a merchant banker valuation report. So if it's been a long time, or if you're a bootstrap company, there's no valuation benchmark, you can try to keep the valuation a little bit low to the extent possible. There is an independent valuer, so you can't influence the process a lot, but you can try to take a more conservative view of your own projections and try to keep the value low, thereby minimizing the tax. But other than these very small, sort of things, there is not much that the company can do in terms of tax saving for employees. So, question from Amjad: how do we deal with ESOPs of a foreign holding company granted to Indian subsidiary employees? So, so as an Indian employee, yes, I may be holding ESOPs in a foreign company. There is, I mean, it's perfectly legal for me to, sort of do this. But in the event I'm exercising those ESOPs, I will need to declare this as a foreign asset. This is from an employee perspective when I file my tax returns. But that only happens when the time of exercise comes, when the actual conversion to shares happens. As long as I'm holding ESOPs, then I don't have any challenges as an employee. Even from a company perspective, I don't have any additional, challenges other than, sort of meeting the requirements of the law in the location where I'm sort of domiciled. So this doesn't take away from the tax liability of the employee as he or she exercises. So as an employee, if I'm exercising, I need to, sort of pay tax. If the company has a presence in India, the company is required to withhold tax, or if I have an Indian subsidiary, I will have to withhold tax. If I have absolutely no presence in India, then potentially the onus falls on the employee to declare and pay the tax to the Indian authorities. But as an employee in India, I'll be taxed in India on whatever benefit I get from the foreign company, on whatever FME of the share less my strike price, etc. What are the advantages of granting ESOPs at an exercise price which is minimal, say face value of the share? So good question. So like I said, if I am an early stage company employee, I'm joining an early stage company. My expectation also is that I want to see some value to my ESOPs when you're making a grantee. So if you're having a negotiation from a compensation perspective, and if you're saying, yes, you're joining my company, I'm going to give you 5,000 ESOPs. The question you can expect to hear from employees is, okay, what are my 5,000 ESOPs worth today? Can you give me a number today, right? Of course, ESOPs is a long-term instrument. I expect the value to grow 3x, 4x, 5x in the next 2 years or so. But I would still want to see some value today, right? So that is why companies which are like primarily unlisted and startups, they price either at 10 rupees at a very low value, or they price at a discount to the fair market value. Now, if I have these two as options, pricing at 10 rupees versus discount to FMV, just mathematically speaking, to achieve a certain payout. So I have promised this guy 10 lakhs worth of ESOPs. Now, if I'm holding shares, I'm having ESOPs where my share price is, let's say, 1,000 rupees. If I price my ESOPs at only 10 rupees, then every ESOP is worth 990 rupees. So to achieve a 10 lakh payout, I only need to give, roughly like 1,100 ESOPs or something like that. But if I am pricing my ESOPs closer to the fair market value, if I say my ESOPs are actually worth 500 rupees, a 1,000 rupee share is worth 500 rupees, my strike price is 500 rupees, every ESOP is only worth 500 rupees. To achieve a certain 10 lakh payout, I will end up giving out a lot more ESOPs thereby depleting my ESOP pool faster. So for this reason, most, I won't say most, a lot of companies prefer to keep their exercise price fairly low. It's easy for the employee to understand. It's a very minimal quantum. Typically, they ignore it. They equate the value of the ESOP to the value of the share itself. And as a founder, I can give out more ESOPs to more people with a certain pool size, with a, let's say, 10% pool, or let's say 10,000 shares in a pool. Sort of. The flip side of giving ESOPs at a minimal value is the accounting implication. So if I give ESOPs where a lot of benefit is being transferred to employees, where I'm keeping the exercise price very, very low, I will take a bigger accounting hit to my P&L, and I will need to, sort of show a lower profit and show higher employee compensation expense, right? Which again, for certain companies, it's an issue. They would want to manage this cost. But if you're a very early stage company, if you're probably loss making anyway, this is a non-cash charge on your P&L. So you may, you may sort of be comfortable with it, and you may go down the path of actually saying, I'll keep my exercise price low. So that's how the decision making happens. It's a question of how much can I use the ESOP pool, how much benefit can I transfer to employees versus what charge do I take to the P&L for giving a higher benefit to employees. So that's a trade-off for people. Question from Bhavika on the steps of ESOP issuance. So let's say you're thinking about ESOPs itself. From a legal perspective, you need to have an ESOP scheme drafted. You need to have that scheme approved by your board and shareholders. And then the requisite ROC, MCA filings need to be done, MGT 14 needs to be filed. The moment your filings are done, then you are empowered in terms of granting ESOPs to your employees. So needless to say, my scheme has to be approved and filings have to be done. Only the date after that is when I can actually make official grant from the company's perspective. So that's what you need to achieve to actually get to a point where you're empowered to grant ESOPs. So yeah, hope that answers. A question from Ayush: Can there be separate exercise price for India employees, US employees? All employees will get US employee ESOPs. Absolutely, it is absolutely allowed. But bear in mind that so legally there's nothing preventing you. Even in India, you can have multiple grants at multiple different exercise prices. It doesn't sort of restrict you. But if you are a US company, there are some restrictions, requirements to follow what is called a 409 evaluation. So if you are giving grants at lower than the 409 evaluation, that results in an accounting implication for the company and may result in a tax implication for the employee as well. So that is something to keep in mind from a US compliance perspective. But from an India employee perspective, I can very well have multiple grants at different ESOP price, and I can have different excise prices compared to my peers. That's not an issue. I think Aish has the same follow-up question. You're required to do a 409A. Do you need to do evaluation separately in India? No, if you are a US entity, you can have the ESOP scheme in your US entity. You can give US dollar denominated ESOPs to your Indian employees. There is no requirement to do valuation here. However, when there is a exercise event, you will need some justification to show as to how much tax you deducted and remitted to the Indian government. So it is an Indian employee, so that employee is accessible to tax in India. So I have a foreign asset, I'm exercising that asset, I'm liable to pay tax in India. Now, the Indian tax authorities may ask you to substantiate that. So when an exercise is happening, you may need to get a merchant market valuation done. But yeah, you need the 409A when you're actually granting ESOPs to US employees. So that's required in the initial stage. This is required maybe more from a grant stage, more from an exercise perspective, not at the stage of grant. Minimum and maximum exercise period after vesting, there is a question from Ashish. So there is no regulatory prescribed period for exercise. And when we say exercise period, we're talking about how long I can hold a vested ESOP before I am asked to exercise, before the option lapses. So there is no regulatory requirement here from an exercise period perspective. It can be very low, in which case employees are forced to exercise faster, or it can be kept long so that employee don't need to exercise and they can hold vested ESOP for a longer period of time. So that's completely decided from a company's perspective. ESOPs for private companies, do we have to create a trust or can company buy back? So there is no requirement for you to have a trust for an unlisted company. Again, what is the requirement for a trust? A trust is required if you intend to allow employees to exercise and hold shares in the company. So that is step one. And the second thing is you expect a lot of employees to actually keep coming to you and asking you for exercise. So from an administrative perspective, rather than holding a board meeting and issuing shares each time an exercise happens, you issue the shares to a trust and the trust transfers the shares to the employee. as and when employees want to exercise. So a trust is just an aggregation vehicle which simplifies the process for employees actually holding the shares of the company. But you should look at a trust only if you intend for employees to exercise. So if you have a transfer restriction, a restriction on exercise, then a trust doesn't make any sense. A trust also has implications in terms of making liquidity a little bit simpler, but I mean that typically only happens post exercise. Right? Question from Nishi: how can excise price vary for different category for employees and for different excise periods? Yes, you can set your excise price. There is no restriction. If you're an Indian company, I can change my excise price. It is decided by the board. It is like common practice to have a justification to say, yes, for all the grants I'm making in a certain period, I'm setting a certain excise price sort of a thing. But this is not a regulatory requirement. It's more just a governance and a good practice sort of a thing. Best practice for the excise period. Any mandatory excise after vesting or employee exit? Any clauses around it? Again, best practices, I'll give you a sense of market, and the market also varies. The market can be, I mean, we have seen cases where the excise period is kept to be very short. So sometimes the company says you have 30 days or 60 days for exercise if you're leaving my company. So in some of those cases, the founders also feel that, you know what, if you are going to leave my company, then you know what, I like, do I really have an obligation to you in terms of allowing you to hold vested ESOPs and managing your tax? Maybe I don't have an obligation. So you take a decision. You have vested ESOPs, either excise it or you have to lapse it. I want to give it to someone else if you're not going to avail of it. I don't want an ex-employee sitting on vested ESOPs for a long period of time. So that can be one stand which a founder can take. This is perceived to be a little bit employee unfriendly because, you know, in an unlisted company, I'll have to part with tax. And this becomes a disincentive for me to exercise. And really, it incentivizes me to lapse the ESOPs and just walk away from my ESOPs, even my vested ESOPs itself. What, from an interest of being employee friendly, what a lot of companies do, they give a longer excise period. So in some cases, the most friendly thing to do is to say it's indefinite. Your ex-employees can hold ESOPs as long as a continuing employee. That's what a few companies do. Some companies make a distinction. They say, you know what, if you're continuing in my company, indefinite, you can hold a vested ESOP as long as you are a continuing employee. If you're leaving my company, I'll give you 5 years. I mean, it's a reasonable time period. One can expect, you know, or one can have some expectation of some liquidity happening within that period. If not, at the end of 5 years, I'll have to go ahead and I'll have to exercise. So I'm at least putting away the decision for the next 5 years in the hope that I can decide with more clarity at a later point of time. So that's it. It somewhat strikes a middle note. You know, it's not very unfriendly and it's not super friendly. You know, and creates a distinction between continuing and ex-employees. But there is no mandatory clause around this. It's just decided completely based on what the founder thinks and what the management thinks. Private companies are exempted to get a special resolution. Can we get the scheme approved by ordinary resolution? I would imagine yes. Shashank, maybe you can also step in here if you feel. But yes, I think it's an ordinary resolution which is required for from a shareholder's perspective, right? Do let me know if I'm getting this wrong. But yes, ordinary resolution should be fine. Can additional ESOPs be given at a different base price than the initial grant? Absolutely. So, you know, the sort of the most hygienic way of doing it, I would say, is where the board decides for a certain period what the excise price is going to be. So I made an initial set of grants at a certain price. Then the company matures, it grows in value. Then the board may decide, you know what, I'm resetting the excise price. I'm going to keep it to be a little bit higher because I believe my company value is increased and I typically price my excise price 25% or 30% discount to the fair market value. So that can be, you know, a way of doing it. And in some of these companies, it's very well documented. The company gets a valuation report. They say this is a value and this is the price which we are setting from an ESOP perspective. Right? But yes, there is no legal requirement for you to sort of follow a certain excise price other than the minimum face value requirement sort of a thing. So you can decide what it is to be. But yes, best practices again is for you to have some documentation to justify it. So in case someone asks, an employee asks saying, you know, why is the excise price very different? Like, what is the rationale for increasing it from 100 rupees to 500 rupees? Then you can have at least some justification to present to the employee to say, you know what, my company value has grown from like 250 rupees to like 5,000 rupees. So I'm, you know, sort of increasing the excise price as well because I want to manage the ESOP expense to my P&L. So that can be like you know, a very clean thing sort of follow. More of a best practice, more of a good governance practice rather than a mandatory. So yeah, I think I've reached pretty much the end of the questions. But yes, very engaging discussion, very in-depth questions from the audience here. You know, it's a pleasure sort of covering all of that. So as discussed, I think we pretty much I only have 4 minutes, but I'll do a very, very quick overview of our platform itself and show you as to what it means from an employee communication perspective. I talked a little bit about automation of systems. So a lot of what I covered as like nice things to do and good to have can be delivered through an automated platform, and we do have one platform here. We'll be more than happy to engage with people if they sort of see this of interest. But I will spend more time on the employee-facing side of it for now, and just show you what it looks like when from an employee engagement, employee communication perspective. So there is an admin view to our platform as well. But I think that's we probably won't have time to cover that in detail. But basically, we automate the record keeping, we automate the compliances surrounding ESOPs, and the record keeping, and the we make the entire process paperless. So you can have a digital grant process. You can have sort of your excise being dealt with in a seamless fashion, and send automated notifications, reminders to your employees as well. So that's what we do from an admin user's perspective. But let me quickly skip to the employee side. So if you're logging into the Capita platform as an employee, so you can actually see I have full visibility. So I'm Zoya Sen. I'm logging into this company. I have a certain quantum of ESOPs with me. I can see how much is vested, how much is unvested. I can see a quick summary as to across my multiple grants. I may have been given grants at multiple different points of time. Where do things stand today? How much have I exercised? How much have I cancelled? How much has vested for me? And I talked about the whole value communication. So you can actually see how the value communication happens here. So I have a number here to say my ESOPs today are worth 1.5 crore. Now, how did I get to this number? It's because the last valuation of the company was 18,000 rupees a share. Now, we also have a cap table module. Our system can pick this up from the cap table module to say you raised funding 6 months back at this price. So one can estimate this to be the FMV of the company. So at this FMV, my ESOPs are worth 1.5 crore. But the employee is also given an opportunity to sensitize and run a scenario to say, I expect the company to grow 2x in value in the next 2 to 3 years or so. So my ESOPs are actually worth 3.1 crore. And that is the number which I'm shooting for. That is what I believe my wealth can get to, provided I stay back in the company and provided the company gets to 36,000 rupees from a share perspective. Now, I have only vested a very small component of it. Large portion of my ESOPs are unvested, and I stand to lose it if I quit now. So a little bit of that opportunity cost is demonstrated to the employees as well. And we have a lot more customizable widgets here to actually say, okay, what were the ESOPs worth when I joined the company, when the grant was made to me? What is it worth today? How has the value grown? And I can see this across multiple grants as well. So I got grants in the initial stages of my company. Company has grown like 5x since then. So my grants are more, sort of valuable. I may have got grants at a later point of time. The growth may not be as high. Maybe the growth will go ahead in the next 2 to 3 years or so. So I can see that. I can see a separate, sort of communication for the shares which I hold, where I've exercised my ESOPs as well. And the grant process as such is automated. So you can make an e-grant from the admin view. Employee will get a notification. They can come here. They can review the key details of the grant, and they can digitally sign the grant here as well. So I can see my grant letter. I can review it, and I can go ahead and I can do a digital signature, a DocuSign of the grant letter here. So all of these processes get automated with our platform. From a dashboard perspective, again, what you saw at the dashboard level is more of just a summary view which aggregates across multiple grants. But you can have like a view which as at an individual grant level as well. So let me just go to the employee view again. Yeah, so I get a quick overview of again, how much ESOPs are vested, unvested. I have a vesting simulator here, so I can see if I stay back in the company for the next 2 years, how much ESOPs will I vest, how much will remain unvested. I can sort of sensitize view that, and I can see every single detail of all the grants made. So I've got grants at multiple different points of time in the company. So I can sort of see that here. All the key details of the grant. When was the grant made? What is the strike price? How much was granted? What is my vesting schedule? I can see all of that here, and how much of the vesting has happened, how much is yet to happen. I can see all of those things as an employee directly from here. And in case you are allowing for exercise to happen, then the request for exercise can also be put up onto the platform itself. So you can actually see how this sort of looks. I can make the payment of the strike price or the taxation on the perquisite value, and upload the details onto the system. And then the admin user actually, the HR administrator actually gets the real-time notification of that. And they can process the exercise and actually do the share issuance to the employee. So I'll have full visibility of all of that as well. And we have a data room for employees as well. So I talked about FAQs, resources surrounding ESOPs. You can store all of that into our system here. The ESOP scheme can be put up here. And we have a fairly innovative instrument called an equity payslip, something fairly unique, which we sort of have at Capita. So it's like a salary payslip, but specific to ESOPs to help an employer understand the wealth creation potential in the ESOP. So I log in as an employee, I can see I have certain quantum of ESOPs at a certain value. Since the last time this payslip was generated, I have vested additional ESOPs, additional grants were made, maybe I've exercised as well. This is how my vesting progress, sort of goes on. So I vested 20% of my ESOPs. I need to be in the company till 2026 for all my ESOPs to sort of vest. This is how the share price of the company has moved over the last 3, 4, 5 years across the different funding rounds of the company. And based on my vesting schedule and my vesting, sort of curve and my share price movement, how has my wealth creation panned out since the time I joined the company? So as I vested more ESOPs, my wealth increases. As the share price increases, my wealth increases as well to get to a certain number where it is today. Now we can extend this line as well to say, okay, this is my last round valuation. I'll do another round at 1,500 a share, and then I'll do an IPO at 3,000 rupees a share. So what can the employee get to by 2026 in terms of his or her personal net worth? Where can your ESOPs really get to? So this really just reinforces the same points as I covered in the presentation: communication of value and communication of the path forward for their employees, so they can take the right decisions to stay back in the company and enjoy that upside as well. So that's just a very quick, sort of overview of our platform as well. I will just see if there are any additional questions. If not, I think we'll be more than happy to stay engaged even after this event. Shashank and I both are here. You can get in touch with both of us for anything you may require. If you like the platform, we can have a discussion on that. We also have advisory. We can help you setting up the ESOP scheme itself. We'll be more than happy to engage. But yeah, I think it's been a pleasure speaking to all of you today. Very engaging session, and hope to have many more sessions like this in the future as well. Shashank, I'll just maybe turn it over to you for some final closing words.
Yeah, that's great, Vikram, and thanks a lot for a wonderful insights. And not only related to communication, but at the same time advisory topics also, which you have covered. We really thanks. We learned a lot from that, and same. I'm probably giving the reaction on behalf of my the participants also. I think I'm on the same page with them. So thanks everybody for participating and taking active part in the webinar, as well as putting up your queries. I hope that is well answered.